Street is not particularly happy with the kind of compression that we've seen in margins. Can you give us a sense of whether they improve from here or not? Because you're losing both market share and margins at the same time. So going forward, will gaining market share come at the cost of margins? Can you give us a sense?
Hi, good morning. So let me address the first concern, I think, on the margin front. So I think, as we all know, the commodity prices have really been, playing a major havoc on the margin side. And this quarter saw the biggest impact because of this war situation. So March and April months were really the months which are the way we saw the peak happening on the commodity side. And most of the inflation which we have passed on to suppliers is based on those peak rates now. So good thing is, yes, going forward, so you only see a benefit coming in because you're seeing the softness has started coming in from month of May itself. May, June, July, you're seeing the softness in the commodity prices. So probably the peak from the inflation side is over. It's only a question of now when you get back those deflation benefit back to your margins. So which we think should happen maybe in the next 2 quarters. We should start getting back that benefit, what we saw as a major impact on the margin side. And second, on the market share front, yes, there have been concerns, on certain pockets. So where we have actually lost market shares, especially strongholds, which is the bigger concern which we had. So the pockets like UP and Bihar, where we had a stronghold, where the market share has been lost. And the major reason is obviously the swing which is happening towards the lower HP segment. They are very highly price sensitive markets. And you're seeing the price increases in the last, almost 6-7 quarters. The 6 price increases have already happened. There's another one which company has taken. So it's a significant jump which has happened on the pricing front, which has started impacting the demand and to some extent also the brand loyalty in these pockets. So I think there's a lot of correction from our side which company has done in the last 2 weeks. I think it's running across issues like on the channel side, on product side, on the trade scheme side. So I think everything has been put into place now. So the idea was before the next festive season starts in September, so we should have all those action taken so that you don't see a major impact happening going forward after the festive season. There will be big numbers will be coming in for September to November period.
Okay, all right, Mr. Madan, we take your points on both those 2 factors, but I'm looking for a couple of numbers. Now, on your market share, you've trimmed off close to around 200 basis points. As you said, challenges in some of those north-central markets. So when do you get back to that market share? If I'm not mistaken, it should be around 11.5 to around 12%. You could correct me on that number. Where do you see the number? When do you see that number head back to around 12%? Point number 1. And point number 2 on the margins. As you said, the worst of the commodity price pressure could be behind. So when do you get back to, say, 13-14% odd? Will it be from the 3rd quarter is what you're tracking? Go ahead.
So first on the market share front, so we expect obviously this will be a recovery which will start happening from this festive season. So obviously you can't expect to go back to the same level immediately. So it will take some time. But the loss has also been gradual and so will be the gain. But we expect hopefully by next year in FY24 we should be able to go back to the normal market share levels of 11.5-12% range. On the margin front, like you mentioned, since the benefit of this deflation will start factoring in the next 2 quarters. So hopefully by Q4, when we exit the year, we should be back to the normal margin level. So that next year, when we actually go enter the next year, so you actually go with a normal level of margin. So I think these are the things which we are really working on, and we hope we should be.
Just to probe you on that, sir, we got it by FY24. You're going back to market share of 11.5 to 12%. On margins, you're saying you're going back to normal margins. What's normal? 13, 14 or 15%?
Yeah, so it's a 13 to 14% is the level. Okay. I think at a company level, the agree obviously will be the higher than that. But yes, this will be the level which we'll be working on.
This 13 to 14% includes the synergies that you would get from Kubota?
Yeah, so obviously the synergies on the domestic side are yet to play out. So I think we started working on the low-hanging fruit, which is essentially on the export side right now. But those are the things I think which we need to factor in. So once we have this midterm business plan ready, and we'll make it public in the 3rd quarter now. So we'll probably come to know where we think the synergies will happen. But that again will be gradual. It will not be really sudden and coming on an immediate basis. But definitely it's going to be in the midterm.
Could you give us a sense of what those synergies could be? If you could quantify that.
Well, I won't be really commenting on this right now because let the midterm business plan be approved by the board first. Once that is done, then we will be talking to the public and the investors at large, maybe sometime in October.
We're not asking you for any material non-public information here, Mr. Madan, but a lot of the brokerage notes that we're reading, they've downgraded their earnings estimate, and the only outlier out there is they're awaiting this midterm guidance that will come from you in, say, September or something. Could you give us a sense of what is to be expected there? Could that be a big game changer?
Well, like you said, there are synergies which obviously we had talked about in the past when we did the joint venture in the partnership with Kubota. I think it runs across in getting the technology support from them on introducing various products and introducing your complementary strength and strengthening each other on the channel side, on the product side, and looking at the export market, looking at the sourcing from India, which can happen for global network for Kubota, both on the component front as well as on this front. So maybe looking at this joint product development in R&D, in India for the global operation. And these are all big ticket items, which is not like I said, it will be something which will be bearing your fruits immediately, but these are the long-term play, which the company will be focusing on. And that will need investment and outlay, which will come out more clearly in the midterm business plan.
All right. So, Mr. Madan, we'll be waiting by for that, and hopefully you speak to us here at CNBC TV18. But let's focus on a couple of other aspects. This post the change in management, the exports actually are looking up. The last quarter, I think you did 2,200 units. For the entire of last year, you did around 7,200 units. So, two-part question. One is, for this year, what should the volume growth be? As you have said, I think the industry should grow by mid-single digits. So, last year, I think you ended at around 95,000 units. For this year, should you be ending closer to around 1 lakh units? And in that, sense itself, what could be the exports contribution to the total sales? Go ahead.
So number-wise, I think looks like it will be closer to the similar number what we saw in the last year. Though the export number will start looking up. So as we've seen, the growth has been happening on the export front, and Kubota volumes now contribute almost 20% of export volume in the last quarter too, and that is growing. So we are still carrying a backlog for execution on export front. So I think we expect maybe this year anywhere between 8 to 10,000 tractors can get exported, and the numbers are only looking up year on year. So we'll only see the new markets getting opened up, and as the supply chain issues get sorted out, so we'll have better numbers coming in on the export front.
Right. And the export number in terms of units will be flat as compared to the last year, right?
No. So there will be growth. So like I said, it will be 8 to 10,000. Last year I think it was 7,000. So about 30% growth will be there this year too.
Got it. And the absolute number will be flat, so around 95,000 units.
Yeah, absolute can be flat, but domestic industry looking at low to mid single digit growth. And the major growth which happened in Q1 was 16%, where we didn't participate. So that's why I'm not really paying.
Okay, let's quickly, try to move to the other couple of segments. One is the construction equipment segment. I think that's functioning at lower capacity utilization levels. The margins were there are only 1%. In the longer term, what is the, the outlook out here on the construction equipment margins? Point number one. And railways is looking up. You're sitting on an order book of around 850 crores. What do you end the year with regard to the railway business? Very quickly, sir.
So I think both the business are doing well because both of the infra stories, and as the government is putting a lot of emphasis on the capital spending, so these two segments are bound to do well, and we are expecting double-digit growth in both the segments. And you've seen in the quarter one also the growth has been good. And in construction, we expect the recovery will start happening from September onwards when the festive season starts, and after the monsoon, when the construction activity peaks up. So we'll have some good traction coming in, and the margin improvement will also happen. But there also the inflation will get stabilized, and the price increases have been happening, which are also able to absorb in the market. Railway is a very good story. So we've seen the very strong order book which has been there. The tendering has started from railways, and we have a very strong order book now. And we expect, I think that business will also do good growth, with the high double-digit growth, and the margin expansion will also start happening, maybe from this year onwards.
That point. And finally, before we let you go, Mr. Madan, you have around, 5,000 crores of cash on your books right now?
Yeah, roughly around that.
Okay, and what's the plan with that? Primarily because, your competitors, there's Sonalika, TAF, there's John Deere, all of them are increasing their capacity, etc. You have a plan with Kubota going forward as well. Will that cash be used for capex, or will there be any sort of buyback or some sweetener coming in for shareholders?
So definitely the first priority will be to use it for the growth of business, and there will be greenfield capacity requirements which will come up. So which is what we said, once we have this midterm business plan, the capital allocation will be more clearer. How much really will go into the growth for the business side, and how much will be available to us, for distribution of the buybacks.
All right. Any inkling of how much will go into capex and how much for buybacks, etc.?
Well, I'll say wait for another quarter. Maybe by October we'll have this plan ready.
That midterm meet, we're really looking forward to it, sir. The entire analyst community.
So we are.
He's whetted the appetite, Nigel. He's whetted the appetite, given us a bit of a tease. But let's have a conversation then, Mr. Madan.
Sure.